Hello traders, welcome to another daily analysis. Today is November 9th. Right now it's just 15 minutes past 5:15 Eastern Standard Time. So of course the biggest event last night was the US election, and of course this result was a surprise for the market and many traders. And as many of you know that I did took a trade during the election. And so let me get into that first, and then we can go over our daily analysis, regular daily analysis later on. So, as mentioned previously, I finally decide to took dollar yen at around, I think, just right around 6:30 or 7 p.m. Around the time that when the Florida the result came out. It's not a result yet. It's just we start showing strength into Donald Trump, and that's when I know that okay, now it's a good momentum to take the trade. But let's take a look at how I actually trade. So I actually trade again with hourly chart with a 30-minute and a 5-minute. So that's really how I trade actually. So I'm gonna change it to 30-minute. And then change it to 5 minutes. So first of all, you can see that we have a completely reversal. So basically, everything that was a downfall during the result of election has completely been erased. And of course, today, the equity market, also both the equity market and the WTI all closed green. So it was a way much better sentiment in comparison with break exit. As many of you still remember, right after the break exit, there was really a huge negativity into the British pound and continue to be like that for many weeks to come. If you look at cable, right after the break exit, we never really have any recovery. This is the break exit candle, and then you actually have further downside. On the contrary, if you look at dollar yen, you actually have a very strong bullish signal today. So, all this, of course, now you're looking back, you know that yes, Donald Trump did have a pretty neutral sort of positive speech at last night, and now the market actually react positively for his wins. I understand there's a lot of sentiment and panic going through the market or the world right now, but the reality is that the market actually in favor and not that much panicking over his winning. So of course we're gonna see what happened in the following weeks. He's going to choose his cabinet, and that might change. He's going to meet with Obama. He's going to have a lot of speeches and comments. That might change the sentiment. But just to show you exactly, just the same lesson. Like when you see this kind of drop momentum, basically just looking at the candlestick itself, you already know that, hey, the sellers are losing power. And that's my meet video that mentioned previously, that there's a lot of momentum going against this trade. First of all is that Bank of Japan has already prepared to intervene. They actually called an emergency meeting at 6 a.m. At the Tokyo time, prior to the election results, 6 a.m. London time. So they actually call an emergency meeting, and a lot of central banks are all prepared for this kind of events, because right after Brexit, actually right after many events like SMB, central banks has adopted and become very efficient in terms of risk management. So they already gathered together to see that if people continue to buy Japanese yen, they are going to intervene. And then of course you have that, and also as mentioned, the action or the profit is always going to be made during the result, not after the result. That means that the money is only going to be made when there is still uncertainty. You gotta understand that the market is driven by emotions of traders. So if we already knew the result, if the result has come out, there is no money to be made. Like I keep mentioning, you only trade when there is surprise. So like I mentioned previously, I got in around 104.88 at this level. Basically, I got in at, let me delete all this so you're gonna see more clearly. So basically, I got in at 104.88, around here. That's right after the first result of the strength into the Florida. And of course, actually, I got drawdown all the way till 105.47, just shy away from 50. So I actually got 50, 60 pips of drawdown. And in this kind of events, like I said, you have to be really prepared to lose because no one knows what the result is going to be. And then what happened afterwards is that of course, we have more and more result coming out and in favor of Donald Trump. So the thing just keep dropping. I think I took my first profit at around 103.88. I have to go back to take a look, but I think my first profit was around 103.88, around here. And my second profit target was actually, I just let it stop out. So my second profit target, I actually just keep tightening up my stop loss all the way to 102.25. Now, why do I choose this level? Well, you have to go to a more shortened time frame. So we had another large drop at 11:30, but at 11:30 or near midnight, basically the result has already been like the decision has already been made. Basically, at 11:30, 12 o'clock Eastern Standard Time, it's actually a win for Donald Trump at that time. And then also, like I said, there was an emergency meeting by the Bank of Japan. So at that time, I start tightening my stop because I start just to prevent this kind of reaction. Of course, I don't know what's gonna happen. Anything can happen from that point. I might get stop out and the things keep dropping. I might never get stop out and just keep dropping. Or I might get stop out and it's actually a good thing because it went completely opposite to my direction. So if I hadn't got tightened my stop loss, I would actually given back all my profit. So and that's 30 minutes. If you look at 5 minutes, then from last night 25, we just go. You see, that's how the market always function. It's always going to go down, go up, go down, go up. It's never going to be a straight line. So this is, if you're looking at this swing high, this is really your first good stop loss point. When it goes down, goes up, this is a stop loss point. This is a stop loss point. And this 102.50 is a stop loss point. And then we have a range bound here. And like I mentioned, 11:30, around that time, we goes down another time. So I tighten my stop loss here. 102.25, between 2025. Of course, realistically, you might say like, why didn't I take profit? Of course, like I say, no one knows what's going to happen. I have my target aiming at 100 handle because that's a very significant support for dollar yen, and that's where the Japanese Bank of Japan is always constantly looking at. So if you go back to daily chart, take a look at daily chart, you'll know that excuse me. You'll know that $100 handle right here. It's quite significant. Look at that. We never really be able to close below 100. So we have a brief penetration from 100, and that was because of the break exit. So the lowest we ever went is 99, and then all this time we never really be able to close below 100. So of course I have my target aiming at that, but of course, just looking at that, the lowest we actually went for this election is 101.20. So and this is actually a very surprise move. I mean, nobody knows that the market will actually rebound so quickly, And then the third reason I got out is because the future market has already limited down. So also the equity market was closed during the election result, and the future market index future is still open. So you can tell basically on how the market is going to react very clearly by looking at the futures market, because just by the word, it's a futures market. People are buying that in for the future. So futures market was limited down for index. So that's that's all those things just telling me that, hey, maybe there isn't enough room to go downside anymore. But because I don't know, So I just tightened up my stop loss. And of course, it was a pretty good trade for me. Personally, I risked very little money and made quite good percentage back. Nothing significant, but for me, it's just a very good learning experience because I had witnessed exactly same thing in June actually during the break exit, and now the same thing all over again. So let's say for this trade into the risk event. So exactly what can you learn from it? I mean, I actually write down, just a brief 3 points I think you can really learn from it right here. So first thing is that you have to believe yourself. But the most important thing, understand that this is a game of probability. Just like life, right? There's no one can predict the future, but you can always prepare for it. So as mentioned, the market has been pricing for a win for Hillary Clinton, and the world has already celebrated that like if she has already won, right? People, if you're looking at today the social media, all this comment like, oh, I can't believe it, this is crazy. I just don't really. Again, I have no political stance in these circumstances. But what's so hard to understand that things outside your control or probability will always happen in life. The thing is that you gotta understand, no one knows the future. So all this confident gap up, keep buying into the dollar strength was a gambling basically, because people are saying, oh, we are going to buy US dollar because Hillary Clinton is going to win. But what kind of evidence do you have? And people say, oh, the poll at the last day prior to the election was at 3% margin. And if you know that, that means that it's very much into a tie. On top of that, you have a lot of statisticians, and you have a famous professor actually coming out from his statistic model, mathematic model, as I mentioned last night, saying that it might very well be a win for a Republican Party. And that was exactly the result. So a lot of people don't have enough conviction. They thought maybe there's going to be a different winner, but they don't have enough conviction. And mainly because people somehow think that other people have a crystal ball for the future. So we somehow get lost into all the media sensation, all the experts comment and believe that somebody else knows more than us. But the truth is, you have to understand no one knows what's going to happen in the future. So that's the first thing that I think very important to learn. And the second thing is that the best way to predict the future is to make it. What does that mean is that, I understand there's a lot of emotion going on right now because a lot of people are in favor of certain candidate and the candidate did not win and things like that. But you gotta understand, doesn't matter who wins this election, is that no one is gonna change your future but yourself. So instead of looking at the election and cheering, getting nervous for someone else, you can actually learn how to make money in this kind of events, right? That's really the best way to predict your own future and make the best outcome of it, because whoever gets elected is not going to change your future. So what you can do is actually take advantage in this kind of events and try to make some money out of it. And as I mentioned yesterday, this kind of events, yes, it does not happen that often, but it does happen all the time. Which comes down to my third point is study history. Why? Is a lot of young people in this generation, don't really have any enthusiasm toward history. But you gotta understand, history always repeats itself. So the funny thing about this is that they got this movement, and I'm just giving you something to compare. Okay, just give you something. I give you a 1 hour hourly candle. Look at British pound versus US dollar at June when we have the Brexit referendum. And then the funny thing is, just look at how similar these two events tying together. Right, just give me 1 second. June 24th. Okay, right here. So look at that. Look at this two chart. Okay, that's June 23 and 24. So look at this two chart. Okay, it's not exactly the same, but look at it. You got a buying power. You have buying power into a British pound because people think Britain is going to remain in Eurozone, and then there's a surprise, you have a huge drop. And the same thing as here, you have a buying power into the US dollar because people think Hillary Clinton is going to win, and you have a large drop because it's a surprise. And guys, I'm not even talking about ancient history. This is June. This is just less than 6 months ago. And yet, people and market and traders has already forgotten it. And today I read the news, people saying, how come the poll is not accurate? And they said exactly same thing in June. So you gotta understand that's the importance of studying history, because history like this always repeat itself. If you're looking at people like, oh, how can it be Donald Trump? Well, people said the same thing in 2004 when George W. Bush was reelected. People said the same thing for Barack Obama. People said the same thing for John F. Kennedy, for Bill Clinton. And that's just in US alone. People say the same thing ancient day in Roman Empire. People say the same thing, in terms of World War I, World War II. Guys, if you study history, then really the only thing I can leave you is that there's nothing new under the sun. Okay, understand that people are the creature of habit, and we're driven by our emotions. So whenever there is uncertainty in the world and the market, you can very much predict the same pattern and habit of human beings. And really just looking at that, June 23rd, November 8th and 9th, it's just crazy. Such a short period of time, and yet, it's exactly same pattern of human behavior. So anyway, I hope you learned from it. Definitely don't think, oh, I missed it, because I'm telling you this kind of events again. Yes, in terms of in terms of the depth, yeah, it's not gonna be, not all events are gonna react like this, but you have a lot of this kind of events all the time. I mean, my friend Andy, he made way over $1 million during the 2011 Greek debt crisis, and that was the same thing. People were like, "Oh my God, the world is coming to the end," and they, make the future for your own. Because whenever there's a panic in the market, 2008, 2009, there's always money to be made. So instead of crying over who gets elected, really learn how to make a better future of yourself. Okay, if you have any question in terms of this, feel free to comment below or let me know. Other than that, I am going to go through today's daily analysis. Okay, so first thing first, because of the New Zealand RBNZ the interest rate decision, I actually took an intraday trade, which was very funny because I was a loser. And the reason is I broke my own rule. So again, it just shows you how funny it is. Even myself, right after a winning trade, right after all these great speeches, I made the same mistake as everyone else. So the RBNZ did cut interest rate to 1.75. And at the moment of the release, I actually short New Zealand dollar. But the funny thing is that I shouldn't even short it. The reason is because, like I keep mentioning to you and to myself, we only trade intraday events if there is a surprise. So I got sucked into this kind of negativity or people's predictions saying that if they cut the rate, we should see some downside movement. And that was exactly the opposite, because they did what they say they're going to do. So the market actually react in the completely opposite power. So we see right after the RBNZ cut interest rate, I bought Aussie Newsy, and the market actually rebound right away and stopped me out. It was an intraday trade, so I have a very, very tight range of stop loss, and I just have to get out. So this was actually the candle, at 3 o'clock. They actually released interest rate as expected, 1.75. It's 0.25% cut. And then actually we have a buying power into New Zealand dollar. So stop me out. And that's the funny thing, like I keep mentioning, sometimes your emotion always sometimes just takes over your logic. Even though you write all the great plans, you just forget about it. So I certainly learned my lesson, and I should not have taken this trade at all, because the result was not a surprise. Now, nevertheless, I actually am in Aussie New Zealand dollar right now in my daily trade. And the reason, of course, is because I actually got into it and went through all the press conference and rate statement. So basically, the rate statement is the same thing as before. There wasn't really much new things coming up. And the rate statement was a little bit positive, actually, because the statement was saying that they're not looking to further easing. However, at the press conference, when people asked the RBNZ official that whether this is the lowest interest rate they're ever gonna be, they give a very affirmative answer. No, they say that the interest rate might go lower if it's necessary. They also say that they are going to remain in a low interest rate for quite some time until the inflation pick up. They also say, when one of the journalists asked that if they are thinking to intervene the market if the New Zealand currency is being too strong, and they say yes, they are always prepared to intervene the market if the currency is too strong. As you know, that New Zealand is an exporting country. They do need the currency to be at fair level for them to be able to make money from the export of dairy product. So basically, the press conference, the tone of the press conference was way much dovish than the rate statement itself. And that's why you have an initial spike down, and now we actually hedge back at 1005 level. I got in, of course, at initial result at 100492. So not really a good entry. But for me, at least it's a daily trade with intraday entry. So sometimes I do this, is I got into a trade with a fundamental event with the perspective to hold it for many, many days to come. So it's just a different style of trading, but really you are trading the fundamental perspective of Australian dollar versus New Zealand dollar. And if all things are equal, I am fairly bullish in Australian dollar in comparison with New Zealand dollar. And that's why I got into a trade. If you're looking at technical candlestick, you have a bullish signal here, a bullish kangaroo tail, a bullish hammer. You actually penetrate in this large space, and now you actually close higher. Today, this is more like an inside bar. So we actually are looking, more in favor of upside, I'll say. And this is also a 50% Fibonacci area. This is also a significant resistance zone if you draw a line here. So I'm quite okay to keep holding it. Of course, I don't know what's going to happen to the sentiment nowadays, because really everything is going to be driven by the US market, by what's going to happen in days to come from the US, the new president elected. And of course, the reason I pick Aussie New Z is because these two currencies are both in the commodity pair. They are both a risk on sentiment pair. That means that if the risk is off, they have a better chance to hedge out each other. Hence, I have a lower risk in picking Aussie New Z. If I pick something like New Z Yen, which is completely opposite against each other, then once we have another negative sentiment coming out from US, we will see another strength into Japanese yen. So things like that, and vice versa. Okay, so let's again take a look at our currency pair, 20-year currency pair. So first thing is euro dollar, euro pound. Now euro pound, as you can see yesterday, we actually again have an initial upside due to the safe haven currency, but actually all the safe haven currency, euro dollar, Japanese yen, Swiss franc, all closed down today because as again the market completely reversed the negative sentiment of the Donald Trump win. Now actually the market is quite positive just looking at the chart itself. So euro pound actually a down day for euro dollar. Euro Swiss was actually also a down day. So euro dollar, euro is actually quite weak. Wow, look at this. This is almost 400 pips of range bound, and then it was a very negative signal for euro dollar, of course. Look at euro Aussie, exactly same thing, and euro CAD. Wow, that is really a huge movement. And euro New Zealand and euro yen. Now, am I going to trade anything now? Not really, because this kind of candlesticks you have to really discredit, basically because this is a heightened event, right? So it's not like a regular market where you have a better probability of convictions. In this kind of heightened events, the candlestick become really irrelevant if you want to trade it. And also just understand the underlying fundamental of each currency pair. So right now, I don't see anything here except euro pound. But again, I'm not going to buy British pound against euro dollar at this point. I'm really not looking at anything at all. Euro New Zealand is good to short, but we are at a very low bottom right now. So, same as Euro Aussie, of course, it's great to short, always buying Australian dollar in against Euro dollar. But we are at a low support area, so not really a good area technically for me to get into any trade. Again, I'm not really a breakout trader in terms of doing the daily trade. I'm really looking at a better range of risk and reward, and for me to do that, I need to have enough profit room to go. Pound Swiss franc, again, nothing really much happening if you're taking a look at British pound. And we have actually an interesting, not interesting, we got these bearish candlesticks into a cable. Normally, I would say it's a good thing to short because, as you know, that US dollar is of course still stronger than British pound. The thing is that I try to avoid US dollar for at least this week. And the reason is because we really don't know where is US dollar going to go. We really have no say of what's going to happen in the sentiment. So, Donald Trump can come out tomorrow or tonight and just say whatever he wants to say, and that is going to affect the US dollar again. So what I'm trying to say is at this moment, really, you have no conviction. You don't know where the US dollar is going to go. If it's not an election, if this is just a regular day, then yes, this is a very good signal for you to short cable and then, hopefully keep holding it. But for me personally, I really don't know. I mean, looking very tempting for me. So I might actually enter it just to betting on US dollar regardless. But if that's the case, I really want my stop loss to be, at as high as maybe 1.3 or 1.28. Just stay far away from this range area. But anyway, I'll do more analysis later on just to see if I'm really going to enter any US dollar trade right now. Cable Aussie, same thing. If you want to do anything, pound Aussie is actually a good pair to short. But again, we don't have a signal here. Pound CAD, again, I think it's a good pair. No, pound CAD is not really nothing insignificant in terms of the currency, because British pound has a positive sentiment but a negative fundamental, and Canadian dollar has a negative WTI markets have a negative fundamental and also might have a negative sentiment because of the Donald Trump win. And pound New Zealand, again in the range bound, I don't see anything here. Finally, pound yen, again actually a surging power into British pound due to the weakness of Japanese yen. Again, like I said, this is a completely reversal of the strength that was in Japanese yen from last night, and now it completely reversed. Now, of course, I'm not going to buy British pound over Japanese yen at this point, because any sudden shift later on in this week or next week will always benefit Japanese yen. So basically, if you want to hold something until now and next week, really, I would try to avoid Japanese yen, because it will be really attractive if if anything that's shaking the market again coming up. Okay, Swiss franc, Japanese yen, and look at that. All these range market, all this buying power into Swiss franc and selling power into Japanese yen just tell you basically how significant Japanese yen is in this kind of events. And this is Japanese yen is really the number one go-to pair basically whenever shit happen in the world. That's really where all the money is going to flee to. So that's why I say I don't want to short it. I don't want to go against it at this week just because we are right after the election and who knows what's going to happen. Right now the sentiment is positive in terms of financial market, but it's very negative in terms of the US or the world economy. If you look at all the social media and all the forum, basically, people are being very, very pessimistic right now. Dollar Swiss, look at this huge range. Of course, same story as dollar yen, same story as dollar CAD. So again, like I say, if I want to buy anything, I rather buy dollar CAD. If I want to buy US dollar, I don't want to go against with the safe haven currency, hate to hate, because we don't know what's going to happen. But look at dollar CAD. Something more interesting is that actually during last night, this was the pair that's actually always have a fairly pretty good strength. The US dollar was never bearish against Canadian dollar, and at the beginning I didn't understand why, and of course now I realize because it's a high commodity, it's a commodity pair, and also because the oil market in terms of US dollar, like it's a lot of political element into it. But just to sum up, that the oil market is really tying to the Canada and Saudi Arabia, an OPEC member. Now, if Donald Trump gets elected, it's going to be toughen up for him to versus all the Middle Eastern country, and that's really not a really positive situation for the oil output country. And also for Canada, we have a Liberal Party right now, and then of course if Hillary Clinton if she had gotten elected, then it will be much better relationship. I shouldn't say much better relationship, but much in sync relationship, as you have two countries whose government are in sync in terms of their political point of view. But now you have an opposite party. One is a Republican in US and a liberal, which is like a Democratic in Canada. So now that's why it's really not a good news for Canada as well. Let's keep going. Aussie Swiss, again, same thing. Money was hugely dump Australian dollar. And again, there's really nothing wrong with Australian dollar per se. It's just really a risk sentiment that was in play. Same as Aussie dollar. I'm not going to short Australian dollar against US dollar. It's not a good position to get in, but also I have no fundamental reason to do that. Aussie CAD, Aussie New Z. And again, this is the trade I'm currently in right now. And again, the reason I like this trade, of course, technically you're at this level. Fundamentally, Australian dollar is stronger than New Zealand dollar. And most important thing is that sentimentally, these two currencies are hedged out each other. So I have less risk in terms of what's going to happen in the US market. Now, Aussie yen was actually the biggest loser last night, and I should have picked it. It's really surprised me that how strong the sentiment when it comes to play, how much correlation each asset class and currency pair can have, because even dollar yen does not have this kind of movement compared to Aussie yen, but US dollar was the currency that is in the headline. However, in this kind of events, you really have to go with the sentiment and pick a currency pair that is the most, the most high yield or the most buying power when everything is good, and it will also be the most selling one when everything is bad. And that's what happened, that people actually dumped Australian dollar crazy last night, and that's why you have this huge movement. So yeah, if you pick Aussie yen, you would have way much better profit than mine. But nevertheless, like I say, a gap up, 2 green candle, it's really no surprise to see this kind of downward movement. But I really didn't know it would drop as low as 77. I saw 78.50 will actually hold, or 78, but it didn't. And that just show you how panicking the market was last night. CAD Swiss, same thing, CAD yen, it's pretty much the same picture, same story at this point. So New Zealand Swiss, New Zealand dollar, and New Zealand CAD, and New Zealand yen. Yeah, so pretty much everything is really the same. So in terms of which pair I'm going to enter, like I say, I am in Aussie New Zealand right now. Personally, I'm looking to short cable. But of course, my risk is really lies down to the US market. Not even the market, just the US sentiment itself. And that really, that will be my biggest risk right now. And other than that, New Zealand and New Zealand CAD also looking good technically, especially New Zealand CAD. I'm not really looking to buy into Canadian dollar at this point. So that's why because I really, like I said, the oil market right now, the relationship between US and the Middle Eastern and all the OPEC members is still a question mark. We have to see what's going to happen in terms of their response and reactions. Cable, another good thing about cable is that you have exactly same surprise events into these two nations, one into Britain, while the other one into US. However, you have exactly different response. When things like this happen in UK, pretty much everyone lost confidence. And I'm not using that as a past tense, everyone lost confidence and they are still losing their confidence. So right after the BRIC exit, the market, everyone panicked, and that's reasonable. But we never even recoup what have lost. You never even goes back to 50% of this candle. The thing is just keep ranging bound, and now we drop again, and now it does look like there's no way it's gonna come up. Yes, there's a high court ruling in favor of the Britain, but there is still a lot of uncertainty into the BRIC exit. There's still a lot of uncertainty into the whole Eurozone. And now the US market, the US election just add on more uncertainty into the world. So if all things are equal, I don't think British pound is a good pair for any long-term investor to buy. On the contrary, US dollar right now has a negative sentiment, but that negative sentiment just because the surprise of election. If you're looking at the fundamental economy, it's still doing very well. And it just shows itself that everything is still going well, and the Federal Reserve is still looking to hike the rate. Of course, they might reduce the rate hikes, but they are still looking to hike the rate. It's because the data shows that they have to, right? They are picking up in the employment. Now that everything is going well. So between now till next year, when Donald Trump really taking the office, you still have about almost 2 months to go. So of course, I still think that just looking at the picture fundamentally, sentimentally, and even technically, that British pound is actually a good pair to short in the long-term perspective. But again, that's just my analysis. It might not be right, might be wrong. I might get stopped out because the whipsaw. No one knows, so we will see what's happening in the market. Other than that, I hope every one of you all learned something last night. And if you trade, please be careful. And let's keep mentioning that you don't have to trade in these kind of events. You can always sit tight and watch. I certainly did that in the BRIC exit last time because I didn't know anything about Britain in terms of politics. So I only played very, very small last time. And of course, this time I did play more baiting into these events, and it was actually pretty good events to see through. It's just kind of excited, to be honest with you. So anyway, if you want to know more or have any question, feel free to comment. Otherwise, just again, I'm going to show you this chart. Just looking at that, that's how strong a human emotion is, right? You can have this 500 pips of drop and 500 pips of up all within 24 hours. So that's where the money is to be made. So I understand that and hope you can learn something from it. All right, thank you very much. I'll see you tomorrow. Bye bye.